All right. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time joining us, this is a weekly panel where the Sentiment team and community members discuss recent crypto market events, but from a fundamental perspective. We talk about interesting market insights that we've discovered over the last week using sentiments metrics, indicators, spreadsheet templates, strategies, and so forth. So if you haven't used Sentiment before and you're not familiar with what we do, I strongly suggest that you check out sentiment.net. Basically, what we are all about is we develop custom tools, metrics, and indicators to help you better understand the crypto market and the behavior of all of its participants and stakeholders. So instead of using and relying on pricing data, we try and rely on more reliable market indicators and data sets. So most of our metrics and indicators are using on-chain social media and development data. And we have over the last 2.5 years developed over 150 different metrics, 150 different indicators, and have recently also started looking into strategies and signals based on this same data set to kind of try to beat the market and just contextualize the behavior of its participants. So I suggest checking out sentiment.net after or during the call and joining our Discord. The link is in the description if you like what you hear today. So also, if there is something that you would like to discuss with us in one of the next calls, please feel free to ping us on Discord and we'll find you a slot in next week's edition. So I'll start with Brian. Brian, if you want to share your screen, I'll go full screen myself and just kind of show us around your templates and we'll go from there.
You bet. Thanks, Dino. Can everyone see me okay?
Yep.
Alrighty. So as per usual, I'm going to get started with a quick update on NVT. This is a demonstration of what the token circulation is doing compared to the market cap of various markets at any given time. Right now, we are looking at Ethereum, and this latest bar would be the signifier for February. And as you can see, we are still in neutral to semi-bearish territory right now. Last week, if you guys remember, we were actually in semi-bullish. And since that time, we surged up to about 275 as a high. And since then, we've kind of hovered between 265 and 271, which is where it's at right now. So what I'm seeing is that token circulation has started to drop off just a little. We're still under one trend line here, but it has actually gone back above the three other trend lines, which it was below last week. So as we can see yesterday, we actually did not have the required token circulation to stay at the market cap that we're currently at. And if this trend continues, we would start to really creep back toward red. But in my opinion, I don't think we will. That's really up to fortune tellers, really. There's no way of truly knowing. But right now, we need to proceed with caution. We're still at a turning point signal because we're no longer in the red. So typically, in order for the markets to turn, we need to see something other than red here, which we're doing now. It's just going to be very dicey over the next week. So we'll be monitoring NVT on Ethereum closely. Moving over to Bitcoin, things are looking a bit more optimistic still. We've seen mostly token circulation that is under the trend lines now. We're in semi-bullish territory still, which is the same as what we were in last week. And if this continues, it is good for all of the rest of the markets. Even Ethereum was surging while it was still in semi-bearish and even bearish territory a couple weeks ago because Bitcoin was propping up the prices of everything else. Because as most of you know, most assets are pegged to the price of Bitcoin at any given moment. Until the market matures more, that's still going to be the case. So watch Bitcoin's NVT here. And right now, I could safely say that we are getting the required token circulation that our market cap is currently sitting at right now. Any thoughts on this before I move on?
Yeah, so Brian, last week, remind me, but I think that the NVT template for Ethereum was kind of flashing a green candle, or am I mistaken?
If I remember correctly, and we could even look
Mm-hmm.
at what the first few days of February were doing. Um, we were through the 7th last week, and we had an average of 168, 169 ish. So if we put 169 on the map here, we would be just under this yellow trend line. So it was actually neutral.
Mm-hmm.
It was basically at that point that you often see where things are starting to turn around. And as this template usually does, it predicted correctly, and we saw quite a big surge. Our high last month was 186, and we're now at a high of 274. So Ethereum went up somewhere around 112%, as I reported a couple days ago on Twitter, in that time span since Christmas. So 50-day span, 112% is pretty insane. And this signal kind of shows that it was justified because there was a lot of FOMO. A lot of whale accumulation happened in late December, and it caused the prices to surge. And the FOMO didn't really start until late January, early February, which is why this signal is the first to really show a neutral sign.
Right. Yeah, because I'm just wondering. I think from an on-chain activity perspective, I think Ethereum is still kind of pretty active actually over the last week or so. But I guess it's just
Mm-hmm.
this surge in price as well that has made this indicator not really turn bullish. So basically, for
Yeah.
those unfamiliar with NVT, what the way it's calculated is you divide the market cap or the total market value of a coin by its token circulation or the amount of unique coins that are moving or being transferred on the network on any given day. So if you can go to send data real quick, Brian, so we can actually see what the sort of on-chain activity for Ethereum has been over the last week. The amount of daily active addresses and even transaction volume, I think, is fairly high, at least relative to its
Yep.
relative to most of February, really. But I guess if you can scroll down to token circulation, just so we can kind of see what this indicator is based on. Yeah, so the circulation is actually down. Rather than transaction volume, which as you can see below also, there's a pretty nice steep incline. The actual token circulation or the amount of unique coins has been
Mm-hmm.
trending downwards. So I would assume this is the reason why NVT is saying, we're slowly kind of moving toward bearish territory with Ethereum.
Right. Yeah. These kind of divergences are very interesting when we see a spread between transaction volume and token circulation, like we last kind of saw around mid-December, which was kind of when we had hit the bottom. Um, Basically, what this is telling us is we're getting a lot of tokens that are being repeatedly cycled in a given day,
Yes,
but the actual unique tokens aren't really moving up in terms of how many are being circulated. So we're
correct.
seeing
Yeah.
a more repeated process of the same tokens being traded now, which could mean that there's more on exchange activity. It could mean a few things, but the divergence is quite interesting.
And if you also scroll a bit down to the amount of or percentage of active coins, so here what you guys are seeing is sand data, one of our our hub for advanced crypto analytics and various different both custom and just traditional metrics and indicators that we have developed over the last few years. So in terms of the percentage of active Ethereum coins over the last, let's say, a few months, if you only select the percentage of coins that were active in the last 90 days, I think you'll see that it's also kind of being trending downwards. So this is also kind of supporting what we're seeing above. So we're seeing fairly high transaction volumes, but the actual amount of active coins is not rising. It's actually since the rally started, it's actually starting to trend downwards. So there's less coins being transacted over the last 90 days than it was at the beginning of the rally, which is something to keep in mind as well during this crazy run that Ethereum has been having.
Yeah, really good point. This is a good stat that really supplements NVT well.
Okay.
Awesome. Let's see. I was going to go over top holders, but I'm going to hold off on that just for time purposes. And I'm going to just quickly go over a new template that I've made that compares the mean ages of different coins directly to each other. So for those of you unfamiliar, what maximal mean age is it is an average age representation that each coin has remained in its current address. So it's basically how stagnant these coins have been in the current addresses that they've been in, and measuring the amount of time / duration that it's sat in that address. So I'm going to show you guys the model that I've made. And what these 10 lines are 10 different tokens that are 10 of the largest market cap non-stable coins that we have on SandData. And you'll notice some interesting trends going on. The very top line here, Binance coin, actually has the worst mean age because we're looking for tokens that are constantly dipping and moving down, signifying that the ages of the tokens sitting in their address are moving progressively younger, not older. So the oldest coins have been in Binance, and we just yesterday, for the first time, saw a little bit of a dip in it for the first time in close to a month. Below that, we have Economy, which many of you know went on quite a surge last week. This could kind of prove that it was a bit of a false rally, perhaps. And then we're looking at EOS is another one that's very high. And then we get into some other ERC20s like Augur. We have 0x. We have Ripple, which has been very interesting. If you guys see the yellow line, we've seen quite a few dips in Ripple, and it's kind of going on a bit of a surge right now. And then Ethereum, it because it's such a large coin, when people do move their tokens, it has less impact. So I'm thinking I may work on this model more to try to have more of a evened out way of measuring when very large coins have dips compared to smaller coins that have significant dips. So here, Maker and Basic Attention Token, they kind of, as we've kind of discovered with them, they take on their own paths a lot of times. And what we see in the mean age is kind of proof of that. There's a lot of movement and recycling of tokens into new addresses with these coins, and it doesn't necessarily mean that the prices always go up because of this trend that's so much lower than the other tokens. But I'm looking more into how we can kind of make some information out of all of this, and I've also highlighted the dips. So what this does is it exclusively looks at any time these tokens actually have a drop like this, right? And it filters out any of the noise where it's just constantly moving up. And if we look at something like Maker here, which I just discussed, we can see how there have been quite a few dips on over the last 90 days since this graph really starts. And I am pretty sure that if I go to Maker's, okay, it actually is already highlighted. If I look at the dips compared to Maker's price, there's going to be a bit of correlation with when prices start to rise after their dips here. So for example, big dip on November 27th, we had a rise the next day. Big dip on December 18th, we had a very big rise the next day. This dip on the 21st was mostly flat, but 2 days later there was a rise, and then the token started to get old again. Here again, 29th, the price rose the next day, and you guys get the idea. So this is going to be another model that I'm going to make available for our pro users. And if you'd like to check it out and you're watching this video right now. We would love to open it up to you and get your thoughts on how it works, how it can be made better, and whether you'd like to collaborate on it, because I would love to talk to anyone who has some Excel/Sheets experience, and talk to some like-minded people out there who are into this kind of data.
So, Brian, just to confirm, this particular chart that we're looking at right now, it's basically showing the times where there was a dip in the maximal mean age of coins, right?
Exactly, by percentage. So
By percentage. Okay.
if something is up around 1,000 days mean age, and it goes down to 950 the next day, it would be like a 5% dip.
So I guess it would also, this sort of chart would also be correlated to the token age consumed spikes. I think. Val, correct
Yeah,
me if I'm wrong. Yeah. Okay. Because the spikes in token age consumed would also be like when old coins are moving, right? So I guess this is a nice sort of complementary template to that as a metric as well. Basically, when we see these idle dormant coins moving, we have seen many times in the past this be not necessarily a top or a bottom indicator per se. Based on the market conditions, it can just mean that volatility is coming to the coin. So while in
yeah,
some,
I view it.
mm-hmm,
I view it as more of a justifier. So when you are seeing prices rise and you see that it's correlating with a mean age drop,
mm-hmm,
that's how you know that it's a legitimate rise and not something that's being propped up by FOMO or something like that.
right, okay, cool.
Awesome. Well, I'll leave it there. And like I said, anyone who wants to check out this in more detail or talk to me about it, please give us a ping on our Twitter.
Thanks a lot, Brian. And yes, so the templates that Brian has showed you today, some of these and a lot of different ones as well, are all available to the subscribers of our SAM-based Pro plans. So if you're interested in checking these and others out, go to app.santiment.net/pricing and see kind of what we're offering for our Pro subscribers. For just $49 a month, you will get full historical as well as current time or present day data for all of the metrics on Sandbase, as well as access to all of the templates that we have developed over the last 6 months with SandSheets, our plugin for importing sentiment data directly into Google Spreadsheets. Thanks a lot, Brian, for your time. And now I'll give it up to Jan. Jan is a data scientist at Santiment, and he's been working on trying to find the new ways to combine technical analysis and on-chain activity into a market-beating strategy. So Jan, if you want to kind of give us a sneak peek of what you've been looking into recently and share your screen, I'll mute myself and give the floor to you.
All right. Yeah, so the idea is relatively simple. Let me share my screen real quick. Okay, everyone seeing my screen?
Yep.
All right, cool. Yeah, so it's a relatively simple idea. It's based on the well-known 50-day versus 200-day moving average, which when it overlaps, it's known as the golden cross and the death cross. Relatively classical use in crypto as well as regular finance. It's basically very slow moving averages to spot kind of a long-term trend, more or less. And our idea was to kind of give it a bit of a spin and use pretty much the same moving averages, but not on the price itself, but rather the daily active addresses metric, which is very high correlated to the price. So it should work relatively similar. And it's also known to sometimes kind of front run. So the idea would be that it might give some interesting signals, maybe even do better than the regular normal gold cross crossover. So yeah, what you see here is like the normal 250 and 200 moving average on the price of Bitcoin, basically you would see that like here it's definitely like whenever the red line, in this case the 50-day moving average, is above, that's a long-term bullish trend, and when it falls below the yellow line, it's a more bearish trend, basically. So after the bull market in 2017, we have this kind of crossover here into the bear market, and then we have another crossover, basically like in the middle end of 2019 into another kind of a shorter bull run, and then you exit into more of a short-term bear market here in the end. And when we basically compared that to or transferred that to the daily active addresses, it looks a little bit like this, a bit more shaky, the whole thing. But the interesting thing is what we see here is it kind of has similar signals, and the sell signal after the bull market of 2017 actually comes a bit earlier, for example. So we have this crossover here a bit after the second spike in the more or less in this dip here, kind of, while in this we would actually exit the market probably somewhat elegant on this second spike here, basically. And also interesting here, we basically in mid 2009 we kind of go in a bit earlier into the bull run, buying in more or less like within the bottom, while with the normal moving averages we would kind of like get in a little bit later. So also here we kind of have an interesting in, and same goes for exiting. Here in the daily active addresses moving average, we go out around here, while in the normal crossover, the normal death cross, we would exit a little bit later. So yeah, like it has some interesting signals. It basically seems to work to a degree to get in a bit earlier in bull markets and get out a little bit earlier out of it. But the problem is when we tried to backtest it, it did not perform so well, admittedly. And that is because, mostly because of this here, where it's kind of like very uncertain. And actually, here you would basically buy in right when the drop happens. So this is, it's a bit more noisy, definitely, and it's like a bit more shaky, as I said. And this is kind of what ruins the performance. So it's not 100% better than the normal golden cross strategy, but I think it's definitely an interesting addition to it, I would say. So yeah, basically one could try to combine that and get some interesting signals out of that. It's also very easily implementable, even in SAM sheets. You just get the daily active address data and generate your moving averages out of that. So I think it's something interesting to look at, and an interesting simple on-chain addition to your average technical analysis, I would say.
And just for clarification, you've used this for Bitcoin's daily active addresses specifically,
Yeah.
right? Have you tried kind of testing it and playing around with other coins like Ethereum?
Yeah, I tried Ethereum. Again, same thing. Like it's a bit more noisy, but it also gave some interesting, like a bit earlier, getting in a bit earlier, getting out a bit earlier. So it definitely gives some interesting signals, but I don't have it in my, like on the top of my head how exactly it performed.
Right. So when we see this, for example, we see the red moving average, the 50-day moving average, topple below the orange moving average or the 200-day one on like in early 2018. Basically, from an on-chain perspective, what this would mean, right, is that we are seeing a sudden and significant plunge in on-chain activity relative to its sort of longer-term trends, right, indicating that there has been a big sort of either a plateau or a very sort of sudden dip in the general interaction with the, in this case, Bitcoin network. Would that be correct?
Exactly.
Right, right.
And it's also kind of like that's also an argument that it's like here you see that it's a very clear cross of these lines,
Yeah.
while in this case here it's kind of like very uncertain. It's been like very close to each other for a while. So that might also be an additional indicator if it's cutting or crossing over relatively like direct, or if it's like a bit uncertain like here.
Yeah, under an angle. Because I'm looking at 2019, so this is what, like August, September, the last time that we've seen this dip below the 200-day moving average in terms of on-chain activity. Is pretty much on the money when it comes to a bearish trend, right? It's pretty much at the very top of, well, the second top of Bitcoin's 2019 rally is when we see the moving average, the 50-day moving average sort of start dipping below, indicating that there has been either a stop or a very significant decline in on-chain activity compared to its longer-term trends, and that has kind of become a self-fulfilling prophecy afterwards, as we see on the chart.
Mm-hmm.
Yeah. So
Exactly. Yeah.
over the last what is that, like a month and a half, we're kind of seeing these lines sort of dance together a bit. So sort of a, yeah, not sure where
Yeah.
it's gonna
Yeah.
go.
That's kind of the issue. Yeah. So I'm a bit hesitant to make some predictions based on
Mm-hmm.
this, but we see here like it's also definitely for the normal. We're kind of like close to this
Yeah.
crossover. And like with the DAA, we're already there. So this might be an early indicator, an early interesting indicator. But since it's been like as you said, like in 2019, it's kind of like close together. It's kind of uncertain. So I wouldn't necessarily say this is like a strong buy in this case.
Mm-hmm. Yeah. Okay. Very cool. Yeah, and I mean, I'm not surprised that the DA Golden Cross is performing maybe a bit less effective at times than the just general price Golden Cross, because in terms of technical indicators and popular ones like Golden Cross, when they appear on the chart, it also tends to become a bit of a self-fulfilling prophecy as well, right? And have that sort of an effect
Yeah.
also. It's not just whereas in terms of daily active addresses, I'm not really I don't think that anyone is at least currently looking at the Golden Cross for on-chain activity. Whereas when you have hundreds of thousands of people looking at this particular chart in their technical analysis and seeing this Golden Cross materialize, that also tends to influence their decisions as well, right?
Yeah, definitely. I mean, that technical analysis generally is always some like it has a bit of a self-fulfilling prophecy
Yeah.
to it. So yeah.
Cool. Okay. Thanks a lot for sharing, Jan. Yeah.
No worries.
So we'll. If you guys are interested in doing this sort of analysis yourself, I strongly suggest heading to neuro.sentiment.net, neuro.sentiment.net, which is our API page, so landing page. So you can see kind of all of the different things and data sets, data points that you can access through our API. So let me just quickly share my screen so you guys can all see it. Allow. Yes, so if we go to neuro.sentiment.net very quickly, everything that you've just seen Jan do in his Jupyter notebook can be done with our API. So through our API, you can tap into not just price related data, but all of the different data sets that we use to create our own metrics. So on-chain activity or on-chain data, we have over 200 gigabytes of social or text messages from over 1,000 different crypto-specific social media channels, as well as the developer activity with over, I think now it's like more than 5 terabytes of processed GitHub activity data for over 1,000 different crypto projects. So whether you're interested in just pure financial data for your backtests or different alternative data sets like on-chain, social, and developer activity, all of this can be accessed through our API, and you can use it through GraphQL, or you can use it through our SandPy, which is a custom Python wrapper that I think is very suited for data scientists and backtests like the one that Jan has just demonstrated. So check out Neuro if you're interested in doing these sort of analyses yourself. So with that said, I'll give it up to Max. Max, I think you said that you wanted to share some of your insights on how the tops can be formed and how you can spot these formations with our metrics. So if you want to share your screen, I'll stop presenting at the moment and let you have the floor.
Yeah, hi everyone. So first, make sure screen is shared. Okay, is it visible?
Yep.
Okay, so I have to explain a few things before jumping to charts. My approach, and it's naturally visible in everything we're doing in Santiment, is a behavior analysis of crypto markets in general, specific assets or crypto networks in particular. And the explanation will be 50-50 how the typically crowd behaves close to the top, and how now, after this 2 or 3 years of development of a platform, we can already to quite good degree visualize it. And from my perspective, the major takeaway should be also like twofold. One, I would really love if we, as a participant network or participant of the market, we do understand the behavior patterns. It's a key. It's very easy. It's very easy to deviate to strategies, formulas, charts. I don't know. Everything which seems to be for us reliable because it's a number. It's a clear saying yes or no. But reality is it's not removing any risk from us. We have to make decisions. We bear the responsibility. So let us not rely on any particular strategy, but stay as close as possible to understanding why. Why is it in this way? If the understanding of why keeps growing, we'll be able to navigate between all different strategies, be it NVT template or golden growth, everything. It always reflects what the major or what the all market participants are doing. Yeah. And in our particular case, we only need to be better than half of them, and then it's already everything's good. So, and as we know in the market phase where Ethereum is breaking almost daily or semi-daily to new highs, I think maybe we mentioned the calls, maybe not, but at least I wrote an insight 2 weeks ago that Ethereum is breaking up. So that was a time when it was good to position for long. Now, if you're risky, you can still do it. I don't think it's over. But it's time to prepare ourselves. How can we stand when the top is coming? Yeah, because as you know, in crypto tops, when they come in fast and everything drops like a stone. And it's also pity to leave the market early enough. And if you are not in the market, maybe it's good for you, so you are not so much concerned, but you can learn something. Now, the tops in the cryptocurrency market achieved in a two specific way. One is like eclipse, like things become insane and crazy. This is a place where Bitconnect are emerging, and everyone knows it's scam, but still buy it. This is a level of insanity. I don't know if we get there, but there is another pattern, which is a kind of where it's insane or like it's intensive or very positive, and there are a lot of predictions that will keep growing. But it's like can stay for a long time, like 1 week, 2 weeks, like over months, but still there might be top already in. Now, we can recognize it in a few particular ways. And the major outcome from it, there is a divergency. Price keep pushing up, but the underlying real objective data is not able to do so. Or some part of data maybe still kept pushing up, but half of it is not. And this is the first thing I want to show. We did have it the last Ethereum top, which was like 8 months ago, in June, July, yeah, end of June 2019, when Ethereum went to 336. And at that point of time, we did have the biggest talk or excitement of all market participants. It typically happens in the middle. So we had very high spike in the market top. It's blue line is social volume. And as we have to some small short correction, try to push to the new highs, you will see the amount of talks was not as high as before. Means for us, the excitement was already before. Most of the crowd either entered there or enter it now, but you cannot bring new participants anymore. And if you cannot bring new excited participants anymore, price has to correct down. It's a first sign where you should pay attention. It will go up. You will see the volume kind of not as high, and price goes down and volume drops even higher. It's a social talk volume. Yeah. Another, it will be visible on-chain communication volume. Yeah, it's for Ethereum, one of the best proxies for it, directive addresses. There are other ways, but directive addresses are good because they cover the whole
Max,
market.
if you can just get a bit closer to the mic. I can hear you, but I think it might be on the recording. It might be a bit. You might be a bit too low volume.
Yeah, and now I don't know. I try to. I have a headset.
Okay, I think should be good.
Okay. So the same, and that's why I put it close to each other. The same, very similar pictures will be on daily active addresses. There will be very strong spike coming together with the price, which is a good, healthy sign, and which is we're having now. Yeah. But then, as the price after correction try to bring to new highs, you will see divergences. And the last top, it was quite extreme. I must admit, I did not saw so clear divergence before. Maybe specific part of the market. And then there is another gentle, but yet very strong indicator, which I think only we have on Santiment platform. Actually, social volume also only us, I think, have in such a clear way. But this is another one. This is a blue chart. It shows daily active deposits. This is a amount of addresses involved into on-chain transactions which are related to deposit addresses on centralized exchanges. And it means this is an activity of traders, investors moving their coins to exchange. And if you're moving to exchange, well, guess what? You want to sell it. Now, as you will see, and here is I try to keep it on one screen. This is actually one of the secret sauce. It's a high activity network, but it's low activity on deposits. Yeah. And there will be high activity on deposits before. This is where people disbelieve or concerned or worried, so they move. Even they grow a little bit at the time, they're already ready to dump. Now, after we keep pushing and you see a network is active and social talks are active and centralized volume are active, yet the amount of deposit to exchanges stops or drops down. It means crowd became convinced, okay, it may be for real. There is no need to deposit anymore. It will not dump. And this is exactly when dump comes. Activity drops down and market crashes a little bit. In this case, we went 336 to 280. Okay, not so little bit, $70. And even though, and here's a double divergency, network on chain activity drops down, the percentage of this activity related to deposit grows rapidly. So with this drop, people start worrying, oh, I need to take my profits, or I need to exit position, and combination of this double divergence, activity is going down even with price growing, and with the first price correction, deposits are growing. It's a very, very, very strong sign, in my opinion, on a growing market where you should seriously consider exiting. I think this is a summary where I could share some understanding of market behavior. And I will put everything in insight on our platform, and we will share the link to this insight, I think, in the description to video, so you can check it anytime later on. And if you have full access to Sunbase platform, you will see all these charts like updating online. I think some of the data will be limited. The first two charts, like trading volume and social volume, I think it's still not limited. And if you have a good eye, maybe it will be enough. But if you want to see the full picture, you would need to acquire full access. And maybe if you say that you're coming from video, they can give you, our team, some special deal involving some tokens. But the setup where you observe trading volume, social volume, and on-chain volume, and on-chain volume in two specific ways, in general and involving exchanges, I believe for Ethereum especially, it's a very strong proxy to make a call, okay, as I said, I need to exit the market. I think, Gino, I'm finished for the day.
Cool. Yeah, very cool. And actually, one of the things that you can share my screen as well, take over from you. Because one of the things that you mentioned, I wanted to check it in sand data. So you mentioned this sort of, not divergence, but the, let me just share my screen, sorry. Can't do two things at once. So you mentioned that when we see the spikes in daily active deposits, basically, or the amount of active addresses that are sending coins to exchanges, but we're seeing a declining slope in actual on-chain activity, that might be a semblance of a top or a top indicator, right? Can you see my screen?
Yes.
Okay.
Yeah,
so I was just wondering if we can see this, because we have this metric specifically in sand data, right? So here in sand data, you can see daily active deposits for Ethereum. And actually, let's put the last year just so we're a bit clearer. Right. So these would be the daily active deposits for Ethereum over the last year. Now, as well as the amount of volume, I think this is a bit bugged at the moment. But this is what I wanted to share. So this particular chart
okay.
shows it is exactly what you've been talking about, right? So it takes the share of daily active deposits in total daily active addresses. Basically, what it's showing you is, all right, when this is rising, this means that the amount or the percentage of speculative activity on the network relative to its full activity or entire network activity is rising. So this is exactly what you've been talking about, right? So here we have, let's go to the daily active addresses overall. We have these peaks here even before the all-time, well, the 2019 top. So the first top, at least in daily active addresses, starts here. So this is what, very early June 1st. And then when we look at June 1st here, where is it? June 1st. Yeah, so it's here. It's actually, it's only 6% of deposit activity in the total amount of activity on the network. So it's very, it's not, nobody's really at this point moving to exchanges, or at least like relative to entire network activity data. But then as we see this sort of divergence or decline in daily active addresses overall, we are seeing also a spike or surge in the amount of deposits going to or the amount of coins going to exchanges. So these two forces combined show that there's been, show this increase that culminates here. So from 6% at the top in terms of daily active addresses, all the way to 19% here whereas afterwards we can see kind of what happened. So, and this is also similar to what we've seen here, right, as well. So we've seen these spikes in the percentage of daily active deposits, or the percentage of speculative activity in terms of the entire network activity, right before the very the last sort of downfall for Ethereum at the end of the year as well. So yeah, just wanted to share that.
It's very good chart, Dino. Actually, it simplifies. Well, you need always to take in context the general volumes, but now what we see here, and you can see it from this chart.
Yeah.
This percentage has been declining. So it's always initially this decline is a very good sign for rapid appreciation of the price. It's exactly the same. People stop moving their coins to exchange, it grows up.
Yep.
Now, what we need, maybe it will happen again. Like I think it was exactly on the 1st of June, strong drop down. Yeah, something like this, and that would be like close enough to the top.
Yeah.
You can still speculate there will be one more top. Yeah. But yeah, we have it in some data indeed. Yeah. I'm mostly using lately Sandbase. I'm trying to be in the scheme of most of our paid customers.
Right.
Most of them are using Sandbase. But yeah, it's available. It simplifies the task.
Yeah, we have it. We also have it for daily withdrawals. Just let me see if there's anything here.
I never actually analyze this.
Max, you don't even know what we have, man. Come on.
No, I know.
Yeah,
no, I never analyze this because in my perspective, it's quite enough to have a few basic things. As you saw from my last insight on Ethereum against Bitcoin, sometimes it's very simple. No need to overcomplicate, but yeah, good to have so many things.
Yeah, no, just wanted to check. So with withdrawals, obviously, it's less clear just because, when you withdraw coins from exchanges, it can be for multiple purposes. It can be for arbitrage. If it can be you want to like move it into DeFi, you want to like use it for some actual utility. Whereas in terms of like deposits, when you see spikes in deposit activity, it's just speculative activity. There's nothing else that these addresses are being used for. So this is why I think daily active deposits and the share of daily active deposits in all or the entire daily active addresses is such a potent signal for TOPS specifically. Okay, thanks a lot for sharing, Max. And since we're on the topic of Ethereum, Val, if you want to share a screen, I know you wanted to discuss the recent MVRV activity for Ethereum, so I'll stop presenting and you can go ahead and jump in.
Sure. So let's look at the MVRV ratios for Ethereum and Bitcoin after the last price surge. So, but first, let's describe what MVRV is. And this is a ratio which gives us an estimate of how much profit the whole network is sitting on right now, or respectively a loss. At Santiment, we have a unique version of this metric that looks only at the coins that moved in the last certain period of time. So here on this chart from Sun Data, we're looking at the average profit or loss of the whole Ethereum network of the tokens that moved within the last year. So for every point of time, we take into account only the active coins for the last year. We look at what price these coins enter their wallets and compare this to the current price of the coin. So what this metric tells us is that when it's below zero, then on average, the participants on the market will be at loss if they decide at that particular time to liquidate all their assets. And when it's positive, then it means that the participants are at profit. So the higher this ratio goes, the more people will be willing to sell their Ethereum and realize profits. So what we can observe is that during price surges, this ratio is becoming high, and there are certain limits which we can see from the history where this ratio is going to reach. Like, for example, if we look at let's say the last 5 years for Ethereum, Actually, we'll need to zoom in a little bit because the initial times are usually very turbulent. We can see that this ratio, which is like the orange one, is declining over time. And this is happening because the market is maturing. So the same thing is happening for Bitcoin also. So these maximums are going to become smaller and smaller. So during the biggest bull run for Ethereum, when the price reached like $1,300, we can see that this ratio pushed to like 240%. So that was the average profit of everyone when the price was $1,200. I think we are never going to reach these levels again for the MVRV ratio. But also keep in mind, it's not linear. It doesn't mean that Ethereum won't be like $1,000 anymore. It's just that if it's $1,000, then the participants won't be having coins that were, I don't know, $1 to liquidate. They would have acquired them at a much higher price. So it's still possible. So it's not like a linear connection between the price and the MVRV. It's a bit more complicated than that. But the main point is this maximum levels of MVRV, we're not going to see them again. So it's kind of decreasing over time. So let's look at the last year of MVRV action so that we can compare the current MVRV with what's happened in the last bull run to $300. So on the last bull run, when we hit $330, we reached 70% for the 1 year MVRV. Now, right now we are sitting at 40%. So I would say that we're actually approaching this 70% limit. And I kind of feel like there is a high chance we're not going to hit 70% for the MVRV. So maybe the price action is going to turn around before we hit the 70%. So right now we are sitting at 40. And that could mean that we are kind of in a dangerous territory there. If we see what is happening for Bitcoin for the same metric, we can see that for the last bull run, when we reached like almost $13,000, this ratio was around 100%, while right now for Bitcoin, we are sitting at around 17%. So it's not so dangerous for Bitcoin at the moment. So I would say that at least from the point of this ratio right now, it seems that Ethereum has been maybe pushing a little bit too hard, and it's been approaching much higher levels of MVRV that seems healthy, while Bitcoin seems to be okay on that front at the moment. So that could mean that it might make sense to reduce your exposure to Ethereum and increase your exposure to Bitcoin at the moment. And another one that I wanted to mention is the mean dollar age for Ethereum and Bitcoin. What we can see there is that the mean dollar age is starting to flatten out, which usually is an indication of approaching tops. As you can see here during the last bull run, you can see that usually the mean dollar age is increasing over time as there is no new money flowing into the market. But when the price is increasing rapidly, then this mean age is going to start flattening out. And we can see this starting to happen right now, which is another kind of red flag we need to be aware of. The same thing is happening for Bitcoin. There is usually much more money flooding into Bitcoin compared to Ethereum. And we can see that in the recent weeks, this dollar mean age has started to decrease, which again is an indication that we are going into a bull run. Usually when this mean age drops down significantly, this could also can be an indication for approaching a price stop. Right now for Bitcoin, it doesn't seem to be that bad compared to the historical levels for the mean age. So giving that in mind, it kind of feels like Bitcoin has still room to grow. but for Ethereum, it might be getting out of steam. So we need to be careful about that. As you know, nobody can know what actually is going to happen, but it's a kind of a way to measure the risk in the market. So from that perspective, I would say that maybe the risk for Ethereum is a little bit higher than compared to Bitcoin at the moment. So that's for me.
Can you also share what the time-bound MVRVs for Ethereum are looking like? Like, is there a specific subsection of users that is kind of currently exposed the most or is gaining the most profit from the current conditions? Like, which guys are really much in the profit, and is it short-term holders or long-term holders? I'm interested.
So right now, it seems that I think the 60-day participants are having quite nice profits at the moment. Let me just compare that to. So let's plot. So here we can see 1 year, half year, 2 month, and 3 month participants. And from all these, it seems like the short-term participants are at most profit at the moment. So we see like around 60% profit for 2 month and 3 month coins at the moment. I think that makes sense because these participants are people that acquired tokens like 2 or 3 months ago when price of Ethereum was basically half of the current price. So these are people that, if you acquired your coins back then you're at quite a nice profit at the moment. So I feel like these people most probably are going to willing to liquidate their assets. So these are the coins that at most profit at the moment.
Mm-hmm. Yeah, cool. And it also looks like the 365-day guys are approaching the previous stop even more than in terms of like the general MVRV. I might be wrong. Well, no, it's kind of the same. Okay.
So the 1 year participants, which will be a kind of a long-term holders, this could be the proxy of the long-term holders, and that's the thing that I'm kind of afraid that the long-term holders as well as the short-term guys that managed to realize quite a nice profit might be willing to realize their profits at the moment. As we see, the 1 year holders were sitting at around 70% profit during the last bull run. Right now, they sit on around 40%. So it seems to be approaching, like we're very close to approaching this same profits from the last bull run.
Yeah.
One question feedback for Ethereum and Bitcoin. I believe we should, when we are talking about gradually falling down tops in MVRV, which I generally agree with you, and I think this is the case. But we need to compare to the last top is 20,000 Bitcoin and 1,000 Ethereum. If you take over the last 5 years for Ethereum, it will go like 4 years and a half. And if you take for Bitcoin 9 years, this is where we should draw the line. The last top from the last summer, it was just the first, probably it was just the first leg of advance.
Mm-hmm. Well, the thing is, I think we are never going to reach these levels of MVRV anymore as we did when it was like $1,300.
Yes, sure. Can you get a little bit more?
So this is, here I zoom in from the last, like the biggest bull run for Ethereum. So this is like end of 2017.
Yeah, but we need one more top before it, because this is where you can pull the line, like declining line. Yeah, from here. Yeah,
so
exactly.
It will
here.
be.
No. Take it from 2016 one. Okay, well, here's enough. Yeah, yes, it's enough. It's enough. Yeah.
Okay.
So that was super actually interesting. It also shows divergence. Yeah, so that was a insane top, smaller top. Okay, I would say based on what you see, it definitely will be, well, very, very likely lower than what we've got on 1,000, which is here 240%. But I would expect it might go above what we had last summer. I would expect.
Mm-hmm. Yeah.
There is a possibility. Let's put it this way.
Yeah.
But I would also doubt that we can reach the level which we had in 17, unless Ethereum becomes world computer. But then we have another problem to solve. Then we're in Skynet time. Okay.
Yeah.
Yeah, but yeah. And I say I remember in Bitcoin it was pretty clear trend line of resistance because they maybe more established over 9 years. Ethereum still like it's if you take a very long term.
So for Bitcoin, I mean, these MVRVs, as we saw, for the extreme values are kind of decreasing over time. So
Yeah.
take the same interval for Bitcoin. And we also need to keep in mind that, Bitcoin and Ethereum are kind of moving together. Like, for example, the big bull run for Bitcoin 20K, it also involved the big bull run for Ethereum, right? So for this one, for Bitcoin, the MVRV reached like 200% back then. And something talking about divergence, like during such insane runs, like a huge red signal is when the MVRV starting to decrease and the price continues to push up. That pretty much means that early adopters, like people that acquired cheap coins, are dumping on the market, but the market is too irrational and is just continuing to buy in. And we can see that this happened during the 20K bull run. Like we reached the top of the MVRV, then it started to decline, but the price continued to push up. So these were people buying in these cheap coins that were getting dumped on the market.
Yeah, good point. Anyway, nice. Also nice that you share it on the full screen for those of people who will ask. I'm saying now for listener or who watch, and you get trial access to our Sun data, and you see, why is this guys? How did they get these views? There are some tricks or combination of keyboards. Yeah, exactly. This is the default. Yeah, and then you press on the view. Yeah, exactly. This is very important. Otherwise, you get lost easily. And don't upset if you don't find it. Just ask us. Because unfortunately or fortunately, we've built so much. Like there are literally, I think, 100 indicators now all over some data. Yeah.
By the way, also I wanted to share like really quickly some analysis I've been looking at, which is comparing level of MVRV with the average future profits that we can expect. And the main idea there is like the blue line is the MVRV, like for the average MVRV for a given month. And then the red line is the average monthly returns for the next 6 months that you're gonna see for that particular time. And you can see that there is like a opposite correlation between the two. As the MVRV is dropping down, your future expected returns will be higher. So that kind of shows that it makes sense to buy when the MVRV is low and to rebalance away when the MVRV is high. So this is the analysis for Ethereum, and this is the same thing for Bitcoin. And it's kind of fascinating how this relationship is forming for both of these coins, which kind of makes sense. I mean, you need to buy the coins when they're relatively cheap, and then you need to be selling them when they're relatively expensive. And the MVRV kind of gives you an idea whether right now the coins are cheap compared to the rest of the network or are expensive compared to the rest of the network.
Yeah, it also gives you the historical view of like what the previous MVRV tops and bottoms were, so you can kind of get a sense of where you are in a cycle in order to say, okay, this is a good time for me to start accumulating or a good time for me to start dumping based on the historical trends.
But also keep in mind, these really low levels of MVRV, like minus 70%, which were like the best time you can have for acquiring the coins, usually they're connected with also some psychological concerns. Like people are like, okay, is Ethereum actually a shitcoin? Is it going to survive? You know, all these kind of things. So it gives you like great price level, but from there, like for example, if you see some coin that is with a very low MVRV, you need to be like, and you see like, okay, this coin right now seems to be cheap. But also you need to be convinced that it's going to be successful, right? It's the same like price to earnings ratio for stocks. If you see a very low price to earnings ratio for a given company, you can say, oh, this company is cheap, but is this company actually going to have a successful business?
Right.
So it's the same thing here. Now, personally, for me, you know, Bitcoin and Ethereum are great candidates to use the MVRV on because it seems like these will be the coins of the future, pretty much. But you know, you can't be sure. I mean, something could happen. But you know, I'm not sure. You know, if we consider Ethereum to be that won't be successful, I think there is a lower probability that any of the other coins will be successful compared to that. So, I mean, yeah, just to keep in mind.
Hey, Valentin, relating to what you just said. We all know that altcoins, and Ethereum being one of them, have exceeded Bitcoin pretty significantly since the new year. And with a lot of MVRV graphs not being as applicable to their values as Ethereum and Bitcoin, how do you feel that maybe the Ethereum MVRV graph might relate to what the rest of the altcoin markets might be doing as well? Do you think there might be some correlation, as Ethereum being kind of the king of altcoins in general, and whether they'll continue to exceed Bitcoin or not? Or do you think that we would need to look specifically at each chart to get the best analysis for that?
Well, I think it makes sense. For example, let's say you are considering buying a certain altcoin. Let's say you're considering buying synthetics. Like, I haven't looked at them, but let's take a look. Synthetics network. Okay. So you look at the MVRV and you kind of believe that, okay, synthetics is going to become great. You know, you believe that it's a project that's going to survive. And then you open the MVRV, like maybe the 1 year MVRV, and you see that it's sitting at 100%. So what this tells you is that, well, maybe synthetics is a bit overvalued at the moment. I mean, if I buy synthetics right now, I would be, like compared to the rest of the network, I would be buying some expensive coins. So it seems like most of the other participants in the synthetics network acquire their coins at a lower price. So as the price starts to increase, I will be one of the last ones to be realizing profits. So that doesn't sound too good to me. So that's the kind of a mindset that I would have for approaching, let's say, MVRV for another coin. Now, I'm not sure if 1 year won't be a little bit maybe too big for synthetics, but even if we choose like half a year MVRV, it seems that it's kind of high. So yeah, I mean, I would approach it for every asset individually.
Yeah, I think that answers my question. And from what I've seen, I agree with you. I think that each altcoin has its MVRV value, perhaps not quite as essential as it would be for Ethereum and Bitcoin because their histories aren't as long. But you know, any project that you'd like to analyze on sand data, I think you can get some good information from each individual altcoin. So thanks for the explanation on that, Valentin.
And you can see here again this pattern where when the MVRV is very high and the price continues to push up, but the MVRV is dropping, that's like the clear indication of the end of a massive bull run. So you know to run away from that. You know, exactly the time when, you know, the people that acquire their coins cheaply are going to just dump them and realize their profits. Yeah, so, but every coin has different price action. So you need to look at them individually.
And everything that you've just seen Val share is available on santiment.net/sandata. Go ahead, bookmark that page for your future endeavors. And if you're interested in a 2-week trial, let us know, and we'll see if we can give you access to all of these charts and indicators, so you can kind of take a look for yourself. Thanks a lot for sharing, Val. I don't really think we have much time anymore, but I just very briefly then wanted to show at least what different Ethereum stakeholders have been doing recently, because it seems to be there seem to be several sort of top indicators, or not necessarily ideal conditions for a prolonged Ethereum run, some at least. So I also wanted to check what miners were doing, because in terms of activity over time, miner accumulation can be generally a pretty good long-term indicator that the block creators are actually confident in the network and its price action. And vice versa, when we see dumps in terms of miner activity, it can both impact the price, and it can kind of be just a sentiment revelation. So we've seen that recently miners have kind of are kind of starting to offload some of their bags. So this maybe looks a bit more dramatic than it actually is, but it's still, I think, around 32,000 Ethereum has been moved from miner balances since the start of the month. So we're seeing sort of this slight dumping by miners into the rally, which, in the past it has kind of proven to be not great for the price of Ethereum overall. And then
Wait,
Okay.
Jim. This is actually important point. Miners who initially have been accumulating, but now fixing,
Yep.
the problem, taking a profit. Actually, it's a good sign, because it means there is a big group of people who are still concerned, that they don't believe the price will keep pushing. That's the reason they're selling.
Okay, so
It
you
means
think
you
this should be
you
also
still
considered
have-
bullish?
Yeah, this many times signals are only revealed in the context. Price growth is in the process of building. If you go to back to 2017, that was initially, not to 2017. Context is a key, yeah, take it, yeah. Now see what they've been doing the whole 17. They've been dumping their savings. And when they stop doing it, or they as the market, well, it's not visible on the screen, but if you go, I remember, I can take
Yeah, but there has been accumulation prior to the rally, though.
Before a rally started end of 16.
Oh, okay.
So a half year long, when the price was increasing from approximately 10 to 400, they've been dumping. And it was all good sign. Once they stopped doing it, they kind of believed, okay, that's for sure. This is where you start, you need to start thinking, okay, not so much anymore. I have to be careful. Initial dump for months is fine. No worries about it. Yeah.
It's also not huge.
Tricky.
Let's be clear.
Small, yeah. It should be bigger, so that we can actually get relaxed a bit more. It's a normal, if the crowd doesn't believe in the bull market, you're in a good position. Once everyone believes, this is where things are getting dangerous.
Okay. These are minors, though, but I see what you mean. Yeah. Over the last 6 months, it looks the dump looks bigger than it, when we actually
now it looks good.
Yep. And finally, let's look at what the Ethereum whales have been doing. So one of the charts that you can see in Sandata is the top holders for all of the ERC20 coins as well as Ethereum. So here we're going to take a look at what the top 100 wallets holding Ethereum in terms of balances, top 100 wallets, have been doing over the last few months, few days. But we can also kind of discriminate between non-exchange and exchange wallets. So the first one, change the balances to Ethereum. So the first chart is showing the cumulative balance of top 100 wallets, and then the second one is showing their balances as a percentage of Ethereum's total supply. So if we look at the non-exchange wallets, currently, they're not accumulating, but they're not dumping either. They're kind of it's indecision, at least from the big non-exchange wallets or whales for Ethereum. And then if we see on exchange, in terms of the biggest exchange wallets as well, we're seeing that they're not really getting a whole lot more Ethereum. So at the moment, we're not seeing huge spikes of inflow of Ethereum to big exchange wallets, which should still bode well for the price activity, at least short term, is that we're not seeing this elevated sell pressure going to exchanges. One of the other things that you can also look in Sand data is the holder distribution, not just among the top 100 wallets, but across the entire demographic of Ethereum holders. So if we look at the last 6 months, the total balance by the number of owned coins, we can see some interesting patterns in terms of Ethereum whales. So let's start with the kind of mini whales, maybe moderate whales. So those that are owning between 1,000 and 10,000 Ethereum. We can see that they've actually been dumping. And this maybe looks a bit stronger than it actually is. This is about 180,000 Ethereum that has been dumped since the start of the month. So this group has actually been dumping into the rally. But if we look at the other participants or whale categories, we see the addresses that have been owning between 10,000 and 100,000 Ethereum have actually been accumulating. So since the start of the month, there's actually been 260,000 Ethereum added to their balances, their total balances. So these guys have actually been, getting and accumulating more Ethereum into the rally. If we look at the category of addresses that are owning between 100,000 and 1 million Ethereum, they have also accumulated about 270,000 Ethereum since the start of the year. And then the last category would be these. I would assume that most of these are exchanges, right? So anyone that's owning between 1 million and 10 million Ethereum, and for them, they have actually been decreasing their total balances, which should actually also be a good sign if we assume that these are exchanges. So first of all, let's see how many of these addresses there actually is. So there's just 5 of them. So I would assume that most of these are like, maybe Binance wallets or some other big wallets. So the fact that since the start of the month, we've actually seen a decrease about 250,000 Ethereum being moved from these wallets should also mean that they're going away from exchanges, which ought to be considered a good sign as well. So just wanted to take a look at several sort of network stakeholders into Ethereum as well, rather than just a general on-chain activity. In Sand data, you can really go granular in terms of different demographics, different types of holders, fish, whales, miners, general network activity, crowd as well. So whatever kind of stakeholder you're interested in analyzing, it's available in our tools. So if, as I mentioned, you like what you see today, I suggest starting at santiment.net and looking at all of the different tools and metrics and indicators that we offer, and joining our Discord. The link to the Discord will be in the description of this video. We talk about this stuff on a daily basis with our community, so you don't have to wait for next week's call to join the discussion and ask us any questions. And finally, if you want to become a part of one of the future calls this week in crypto, ping us on Discord. Let us know what you would like to discuss. If you have any ideas yourself that you would like to share with us in terms of a fundamental analysis and data that you have come across, let us know, and we'll be happy to find you a slot for one of these next calls. So until next week, I would like to thank everybody that has joined the call and shared their insights today, and I'll talk to you guys in 7 days.
Thank you.
Much appreciated, everyone.
Bye.
Bye, guys.
Thanks for the message. Yeah, bye.
Thank you. Bye.